This video explains what it means to apply factory overhead to work in process. Factory overhead are indirect costs such as heating and lighting the factory, repairing and maintaining factory equipment, property taxes, insurance, and depreciation on factory plant and equipment. Companies do not know their factory overhead at the beginning of the period, and so they need to estimate it. If a company waited until all the overhead costs were known at the end of the period, the allocated factory overhead would be accurate, but it would not be timely. Factory overhead costs cannot be traced to a cost object. It's not identified with the cost object. For example, utilities, the lighting and heating of the factory cannot be traced to any jobs, cannot be traced to the process. It's for the whole factory. So it must be allocated, and it's allocated by using the estimated total factory overhead costs. The total costs divided by the estimated activity base. For example, the guitar company estimated that the total factory costs is $50,000 and there are 10,000 of direct laborers. So the predetermined factory overhead rate is $5 per direct labor hour. Now we have this overhead rate, this predetermined factory overhead rate, and the base is the hour, direct labor hour. With this rate, we could apply to any cost object, and recall that a cost object may be a product, a sales territory, a department, or an activity such as research and development. Let's say the cost object here is job number 71 and job number 72. Job 71 has 350 direct labor hour, job 72 has 500 direct labor hour, and when we apply the factory overhead rate that we just calculated, the predetermined factory overhead rate of $5 per direct labor hour, so $5 times 350 hours, we get 1,750. And $5 times 500 is 2,500. A total factory overhead that is applied is 4,250. This rate, the factory overhead rate of $5, is an estimated rate. And we apply that to the actual amount of direct labor hour. And this is called factory overhead applied. It's different from factory overhead actual, not the actual amount of factory overhead. Actual factory overhead is what's incurred in production, whereas this is the factory overhead applied. We use an estimated rate, a predetermined factory overhead rate, and we apply that times the actual direct labor hour. Actual overhead was recorded as a debit. To apply factory overhead to work in process, we now credit factory overhead. We debit work in process. If the applied overhead is equal, the same as the actual factory overhead, then there's no variance. If, for example, actual factory overhead was $4,600 and here we have applied overhead of $4,250, which is less than the actual, so the actual was debited, now we credited, we have a net of a debit. And a net debit balance means that overhead was under applied. A net credit balance means overhead was over applied. If the balance of factory overhead either under-applied or over-applied becomes large, the balance and related overhead rate should be investigated.